Why do stock markets crash? And more importantly, why do some people become millionaires during the exact same crash that makes everyone else panic? It feels unfair, right? Two people. Same crash. One loses everything, the other gets rich. How does that happen? Today, I'm going to break down stock market crashes in the clearest, simplest explanation you've ever heard. No jargon. No confusion. Just real, practical insight. You're about to learn what actually causes crashes, why they happen more often than you think, and how regular people quietly build wealth during market chaos. By the end of this video, you'll understand exactly why fear costs money, and how calm, smart decisions during a crash can completely change your financial future. Let's get started. To understand why markets crash, you first need to know this. The stock market isn't logic. It's emotion. It's psychology. It's millions of people reacting at the same time. Crashes usually begin with one of three things. Number 1, bubbles bursting. When prices rise too fast and everyone believes stocks can only go up, they eventually collapse. Just like the dot-com bubble, where companies with no profits were valued like tech giants. Number 2, bad economic conditions. High unemployment, slowing growth, or rising inflation can drain confidence. When the economy suffers, the market panics. Number 3, sudden policy changes. Interest rate hikes, government decisions, or unexpected financial rules can trigger fear. And then there's the wild card. Black swan events. Things no one sees coming, like COVID-19. These events shock the system and lead to massive sell-offs. But here's the key. A crash doesn't happen because the world is ending. A crash happens because people think the world is ending. Here's something you won't hear on the news. Stock market crashes are completely normal. There are 4 levels of market drops. A pullback, 5% to 10% dips. Very common. A correction, 10% to 20% drops. Happens every year or two. A bear market, 20% plus drops. Happens every 5 to 7 years on average. A full crash, massive, sudden drops of 30 to 50% or more. The news makes every dip sound like the end of the world. But in reality, the market has always recovered. After the Great Depression, it recovered. After 2008, it recovered. After the pandemic crash, it recovered faster than ever. The market doesn't rise because things are perfect. It rises because humans innovate, build, and create value over time. Crashes are not the end, they are resets. How people get rich during crashes. Now let's talk about the most important part. How do some people get rich during a crash? Here's exactly how they do it, step by step. 1. They don't panic sell. When you sell during a crash, you lock in your losses. Emotional decisions destroy wealth faster than the crash itself. 2. They buy quality companies at huge discounts. During a crash, great companies fall just as hard as weak ones. But strong companies rebound, and rebound big. Amazon dropped over 90% during the dot-com crash. And then rose over 8,000%. 3. They use dollar cost averaging. Instead of trying to guess the bottom, they invest a fixed amount every week or month. This turns market fear into opportunity. 4. They stay diversified. One stock falling won't destroy their future. They spread risk across ETFs, index funds, and different sectors. 5. They ignore hype and FOMO. When everyone rushes into the hot stock, disciplined investors look away. They invest based on value, not hype. Wealth is built not by reacting, but by sticking to a strategy when everyone else is losing control. Here's the truth. You don't need to be a genius to survive a stock market crash. You just need to stay calm when others panic. Crashes punish fear, and they reward patience. Every crash in history has looked terrifying in the moment. But every single one has also created massive opportunities for those who stayed disciplined. So the next time the market drops and the headlines scream disaster, Remember this: fortunes aren't built during calm times, they're built during chaos. By the people who stay rational when the world loses its mind. If this video helped you think differently about the stock market, hit the like button, share this with someone who needs to hear it, and subscribe for more clear, simple breakdowns of money, investing, and wealth building. Stay calm, stay informed, and don't fear the crash. Use it.